Hey guys, it's Alex. Welcome back to the channel. Today I wanted to unpack what the heck has happened in the Victoria, BC real estate market in 2023, and as the year is drawn to a close, why have things grinded to an absolute halt? Is our market on life support? Are prices going to fall off a cliff in 2024? I want to address my short to medium term expectations, as well as highlight what's going on in the news, new BC government legislation aimed at addressing the supply side of housing in BC, changes in Victoria specifically, like a short-term rental ban, and amendments to the Missing Middle Housing Initiative. We're going to unpack that all in this video, so stick around and let's see where we're headed in 24. First off, let's talk about what's happened so far this year. It's been a slow and sluggish year in real estate, outside of a few months in the spring where we did have an uptick in demand because of a softening in mortgage interest rates and more buyers coming back off the sidelines. All that being said, we're far removed from the pandemic market that we were in just a couple of years ago, and our unit sales are down 41% from 2021 so far, not incorporating all of December's data. Even with sluggish unit sales and demand, and multiple months that had multi-decade lows in unit sales, prices have held up reasonably well. There seems to have been a plateau that we reached in the spring, which basically ran all the way into the fall and has only just started to slip ever so slightly in both detached and the condo market. That dip that we're seeing now in prices dropping is mostly related to the gap widening between sales month over month and active inventory month over month. Typically, the 5-year average shows us that listings peak in July, but this year has been a little bit different. With a few surprise interest rate hikes from the Bank of Canada over the summer months and concerns that inflation was going to be sticky and rates would be higher for longer, we saw a return to higher interest rates, posted fixed rates above 6%, and falling demand through the fall that's led us to this point in time. As that happened, a lot of sellers coming back onto the market in September and October were shocked to see that their homes were not as liquid as they thought they would be, and we've actually seen listings peak at the end of October, which is highly unusual, and again, we haven't seen that in the last 5 years. Listings are beginning to come off the market now, and our active inventory is starting to drop, as it typically does around this time of year. Unit sales also are dropping, but there's some conversations happening with buyers and with sellers wondering what the heck is going to happen as we move into the new year. Is the spring market going to be a renewal of excitement and energy? Well, that's a question about what is the path of interest rates and what do we think it might be over the next few months. We did have a few bits of data that have come out over the last few weeks, which give us some insight into the potential path of interest rates moving forward. One of those was the October CPI print, which came in at 3.1% year over year from 3.8% in September. That was largely because of a fall in gasoline prices, and the most significant drivers of inflation remain mortgage interest costs, food, and rent. Excluding food and energy prices, it was down to 2.7%, which is also down from the previous month, and the Bank of Canada's preferred measures, trim and median, were also down. It looks like their interest rate hikes are having an effect on limiting demand, and the markets are beginning to price that in. The Government of Canada 5-year bond yield has dropped more than 100 basis points in the last month, and that's the primary element that prices fixed rate mortgages in Canada. Some of those have also started to decline, and looking ahead, because that spread is so wide, I could see that continuing to tick down as we move from January, February into March. The other bit of data that we had showing us interest rates are having an effect was a contraction in GDP for the third quarter of Q3 in Canada at negative 1.1% on a year-over-year basis. Although the previous quarter was actually revised up to 1.4%, basically growth has been flat from the 2 quarters, and it's once again showing us that the economy is stalling, demand is pulling back, and we should expect inflation to fall with those two things happening. Now, with all that said, I'm not an economist, but I don't believe that rates are going to get cut by 200 or 300 basis points over the next 6 months, unless there's some sort of deep recession that we go into that requires heavy fiscal stimulus and aggressive rate cuts from the Bank of Canada. I believe money markets are pricing about 100 basis points cut by the end of 2024 and 50 by June, which means that we're going to end up in a slightly more palatable interest rate environment, maybe back into the high 4% range for fixed rates, which means we're back into a more buoyant real estate market like we were in the spring of 2023. Where are things like inventory going to go between now and the spring? I can't say for sure, Certainly, the idea of listings peaking in October suggests there are more people willing to sell in 2023 than there were in years prior, and probably means we have more listed inventory in the spring than we've seen in years past, which I think is healthy. I think we're going into a more balanced market. I'm not going to scare you all with FOMO and buy now or buy higher, but I do think we will see some steady price growth in 2024 if rates do decline as I expect them to. What does that mean? Well, it just means there are opportunities now, potentially, and this does feel like a bit of a trough to me with my boots on the ground. I'm seeing some sales go through that I wouldn't have expected just a few months ago, and if you're in a position to purchase, I do think this is a good period of time to do so. Now let's talk about some news that's affecting property rates in BC, as well as development over the next 5 to 10 years. The first change is regulation coming into effect May 1st of 2024, which affects short-term rentals in the province of British Columbia and the urban centres specifically, like Victoria. Of paramount importance is a segment of the market here, our short-term rental market, which is primarily in the downtown condo market. There are 19 condos zoned for transient rentals or Airbnb, and many of those now are coming to market because sellers aren't in a position where they can rent those out long term, whether they be small one bedrooms without parking or studios that aren't as conducive to rentals, or investments made based on the fact that they could Airbnb. Sometimes the math just doesn't math anymore, so some of those owners are forced to sell. Of those 19 buildings, there are 68 units currently available, and only 3 have changed hands since November 1st. All of them in the building in behind me here at Mermaid Wharf, just down in Old Town, Victoria, and all 3 were for less than $357,000. Unfortunately, there is just not much demand for these kinds of condos at the moment, especially when sellers are attaching a premium to them being Airbnb buildings that they were used to seeing because of sales based on projected revenues that you could get from renting them out in the summer for north of $5,000 or $6,000. That premium is now gone, so they will unfortunately have to get priced more in line with the broader condo market. And as you can imagine, because many of the buyers in that segment are either investors or first-time buyers having to qualify at 7+%, there's just not a lot of demand in the condo market. Now that could change once again if rates start to turn, but for now, prices are pretty soft and there are a few deals to be had out there. Bill 35 is what covers the short-term rental regulations, but there's also Bill 44 and Bill 47, which form part of the larger picture of the provincial government's housing plan and housing strategy to create more homes over the next decade. Original projections had about 150,000 homes getting built because of these efforts, and now a new report released by the government actually states they could expect up to 293,000 new units as a consequence of these new initiatives. 44 has to do with updates and mandating that municipal governments update their bylaws to allow more density on single-family lots, to have at least a suite, a detached unit, or up to 6 units on any single-family lot, much like we've seen in Victoria with the Missing Middle Housing Initiative. Unfortunately, that policy was a little bit too restrictive, and there were only 3 applicants that actually met the criteria originally passed by Victoria. Consequently, councils decided to open up those restrictions a little bit with the hope that it appeals to more small-scale developers to create some of these units on missing middle lots. Bill 47 has to do with increased density around major transit corridors. There are 104 of these sites located around the province, and once again, it's about more density in areas that make sense being mandated by the provincial government. The other interesting concept that's come forward are new standardized designs for some of these higher density units, which would allow the development process to speed up exponentially because you don't have to go through this huge design and consultation phase, and there are pre-approved designs set at the provincial level where higher densities can be achieved with a little bit less red tape. Ultimately, all of these initiatives are about creating more density and more housing. And realistically, it's all going to have an impact down the line and not necessarily over the next 1 or 2 years. Although we could say that if more of these developers take on more of these projects, we could see land values continue to rise in the city of Victoria, where we've expanded just about as far as we can go, with ocean on one side, mountains on the other, and parks or ALR in the other direction. Perhaps the only negative piece of news that's come through is the new BC Building Code may end up costing developers and builders more, and thus consumers more. Although you can't really gripe with things that have to do with safety and accessibility, like adding elevators in smaller buildings and a maximum temperature limit to ensure units stay cool enough, this is going to add more cost to building and thus more cost to buying or renting. So we'll see how that plays out. Ultimately, all of these initiatives and changes won't have an effect on the immediate future, but will over the next years and decades. And I think it's great that the provincial government is finally taking some initiative at the supply side to free up and clean up the process of building new housing in our province. I thought this was a great place to end this year's market update recaps next to the Nutcracker and a nice Christmas tree setting. I hope you and your families have a warm and cheery holiday season, and I'll look forward to connecting with you in the new year.